There are three different types of backtesting that I carry out, and they all have different uses. So before we get into the processes, we're going to talk about what these different types of backtesting are and how we complete each different one. So the three main ways to backtest for me are, first of all, markups, second of all, live backtesting, and third of all, forward testing. Now, markups are the very first step you should take when you come to backtesting. If you have your rules, you have your strategy, the first thing you should do is start forming markups. To collect markups, we run through previous price action and mark up the best case scenario trades. So these are essentially the picture perfect setups that follow the rules in our strategy. The idea of this is that we learn to identify the best possible things to look for. So if we have a rule to sell from supply zones, we go through and look for the best place in supply zones, or how we can refine those supply zones, things like this, where the best entries would be for trades. For example, the bottom of a zone or the midpoint of a zone or the top of a zone even. Things like this. If we do the markups, we can actually see overall, over say a span of 10 to 20 or 50 trades, the best place to enter from supply zones is this. This rule is redundant. This rule is best executed in this way, and so on. Okay, so while markups don't give you that live trading experience, what they actually do is give you a basis, a starting point, and actually show you the best possible rules and the best way to tweak your rules, things like that, before you actually get into the live testing. The second way to backtest, and probably the most important, probably the most efficient and effective, is live backtesting. This is your standard backtesting where we use a bar replay tool to trade through previous price action and previous data as if it was a live market. So let's say we wanted to collect data on September 2020, for example. What we can do is use a bar replay tool to scale back to the start of September 2020. And what that's actually going to do is let us trade through September 2020 without knowing what's going to happen next, as if we were trading a live market. So this is the most common, most popular, and the most effective and efficient market backtesting method. And it's the one that we're going to use the most overall, to be fair. But the others are very important as well. So we're going to cover those, and I'm going to show you how they can benefit you on top of this live backtesting method. Now, the third and final method of backtesting that I'm going to talk about is forward testing. What this is actually when you identify possible trades in current market prices, so not past price data, and up to actually mark them up and track them with no live entry. Now, usually when you're trading live, you are going to enter trades, but perhaps you see something that may be a refinement to your trades, but may be different and may be out of your rules, and you don't want to take it live, but you do want to see how it reacts. What we can actually do is forward test. So we have a trade now, for example, and we think it's going to, take place over the next week. We don't want to take it though because it doesn't completely fit our rules. So what we can actually do is take a markup of that chart right now, put our information in there on what it is we're looking for, and then come back in a few days and see how the trade performed. And from this, what we can actually do is find refinements to our rules and new rules that we can implement into our trading. So all of these methods of testing are important. All of them will be used continually throughout our trading on a day-to-day basis, and they all have different benefits. So what we're going to do now in the next couple of videos is get familiar with this process of backtesting in these three different ways. Here's a quick example of the markup process. Now, when we're doing the markups, as I said, is the first step in backtesting, and it's not really getting you the market experience, but what it's doing is giving you a clear image of what you need to look for in the markets. What we do in a markup scenario is simply scale back to price and then see how our rules play out and mark up trades accordingly. This is our trading plan for this example's sake. First of all, we want to see a break of structure. Then we want to find a supply zone in a downtrend. Then we want to set our sell limit at this supply zone, and then we want to use the demand zones in the previous trend, so the trend back here, for our targets. Now, what we could then do is look for these rules to have been met and actually find the best case scenarios for this trade, okay? So if we scale back to here then, let's have a look at this initial setup. Well, first of all, we can see at this point a break of structure, and we can see we're clearly in a downtrend. So this is our break of structure. So we can mark that out. Then we can see find the supply zone in the downtrend. So the supply zone that broke the structure was indeed this one at the top of this move. And then from this, we can actually see where in the zone is the best place to sell from. Do we want to sell from the midpoint of the zone? Do we want to sell from the low of the zone? Well, we can see from this, in this example, our original two methods of the plan, the break of structure and the supply zone, and the sell limit, of course, all work very nicely. So this is good to actually test our strategy and see it working nicely. And it also gives us a lesson of, okay, in this example, if we'd sold from the midpoint of the zone, we would have missed the opportunity. But selling from the low point of the zone gives us a very nice trade. So then our final rule was target demand zones in the previous trend. So if we scale back to the price back here, we can see, okay, we have a very clear demand zone around this point. So what we can do is mark this up, and we can use this as our target for our trade. So that is all 4 of our rules in play. So as we can see, sell limit on the bottom of the zone here, targeting previous demand zone, which would be this zone here. And then we see a 6R trade using those rules in our trading plan. So really what we're doing here in the markups is not getting the market experience, but learning the best things to look for. So if we do enough of these, we're going to know where's the best place to sell from or buy from in supply and demand zones. We're going to know, does this strategy work consistently, and does it win enough of the time to actually be profitable, or is the losing ratio too high? Things like this are going to come out the markups, as well as just building a real clear pinpoint eye for the markets. Okay, a lot of things can come down to intuition. If you have enough market experience and you've seen the market enough times, you're going to spot things that you wouldn't spot if you didn't have all of this experience. So this is how markups work. We're going to go through the process in depth in the next video. But for now, let's move on to the next type of backtesting. In this type of backtesting, the main type of backtesting, we use a bar replay tool to scale back in price, and then we trade it as if we're trading live from wherever we are. So we use this nice tool here. As we can see, we scale back to somewhere in price, normally the start of a week or a month, and then we can actually scale price forward and trade it as if we're trading live by using the button like this. So for example then, in this opportunity, if we were to use the same rules as we used in the previous example, the break of structure, supply zone, sell limit, target previous demand, we could see here, right, first of all, we have a break of structure. Then we have a supply zone at this point here, which has broken that structure. So we could go ahead and plot this supply zone on the market. We could go ahead and then put a sell limit. And then as we do for our targets, we want to target previous demand in the trend. Now this one leaves a lot of open space to be filled. So for this example, we'll target into this zone. And then what we can do now is size up the trade, make a markup of this before the trade plays out, and then we can allow the trade to play out by actually using this forward button on the bar replay tool. See if our trade gets triggered. In this instance, we have been triggered in, and then see how the trade plays out. So as you can see, the markups don't really give you a clear indication of market experience, and they actually just give you everything you need to see. So you have the benefit of hindsight on your side. When we do this live backtesting, we don't have that hindsight. We're essentially trading live, but using past price data. Now, what this allows us to do is, first of all, see whether or not we can apply our strategy to live markets, because if you can do this successfully, you can almost certainly apply this strategy to live markets successfully. And it also allows us to see how we would feel throughout the trade. Now, it's not going to give us the emotional feeling and the mindset, the additional stress and real emotional feeling that we get from the forward testing and actual live market trading. But what it is going to do is allow us to slowly scale through the price and see, okay, when would we have moved our stop loss to break even? When would we have changed, anything about the trade? Would we have gone ahead and closed the trade there out of fear or out of, fear of reversal? So all of these things can be considered when we do this live back testing, and it's one of the most effective ways and efficient ways to build your confidence as a trader and actually see what works, what doesn't, what can be changed. Okay, doing this is going to set you miles ahead, which is why I say it's the most effective, most efficient, and one of the best ways to actually backtest. So we're going to get all into the process of this very, very soon, but let's talk about the final type of backtesting. Forward testing, for example's sake, is something like this. Let's say then, right now in the market, we're looking at this example on Euro USD. We're looking for an hourly bullish move to occur from the demand zone that we've just traded into. So this is our overall move. This fits in with our plan. This is what we're looking for. Happy days. But what we may have on the way into that is a short trade. Okay. So let's say, for example, we were here on the 3-minute time frame while we were waiting for this trade to occur, and we thought, maybe we could actually get a sell opportunity from this supply zone. And potentially, this may be something you want to look to bring into your trading more often. These low time frame moves to sell into long-term buying moves. Maybe you want to test this idea, but you don't want to go in live because it's not something that's in your plan yet, and you just want to see if it's effective. Well, what you could do is actually mark up a trade like so, target your area of interest for your buys, and then actually let this play out, but don't execute a move. What this is going to do is keep unnecessary, stupid losses out of your account while you're testing, but allow you to actually see which trades played out and which trades following these tested strategies work. What you actually get from this is the benefit of seeing how long things take to win or lose. As you can see, this is lost. What it's going to do is give you a good basis of how long things take to win, how long things take to lose, and give you an idea of whether or not you can actually bring these things into your strategy successfully, long term, without having to risk your money on it. This has been a clear example because, as I said, you can test moves without taking real losses. And if you had taken this move on your real account to test it, you would have just taken a really unnecessary loss, which is going to hammer your account equity if you keep taking test trades on your real live trading account. So that is all for this video now. We're just going to shoot back over to the presentation. And then what we're going to do now is start talking about the processes of the markups, live backtesting, and forward testing in the next couple of videos. So I hope you've enjoyed this, and I'll see you there.